Welcome back. You with us here on Opening Fire. We've got the market which is come off. I mean, just 10 points left on it. On the Nifty, that is. So significant slow sort of drop from the day's high. 60 points, I mean, to be exact, from the highs of the day. 77.61, one way so far. Justdial reported numbers. The stock was up some 5-6% in the morning. I think it would have cooled off a little bit. Yes, it has 3.5 higher just on it now. My colleague Hina is joining us from Delhi. She spoke with Ramkumar Krishnamachari, CFO at Justdial, and she's going to take us through the conversation. Go on.
Thanks, Prashant. So when I asked Mr. Krishnamachari about the overall quarter, then he said it did turn out to be a strong quarter on all fronts. Let's listen in to what he said about the specific factors which contributed to the growth in this quarter and what he expects ahead.
Yeah, the quarter was very good. I would say we have seen the turnaround from a business standpoint. As I mentioned, Q4 was, I would say, would have seen the bottoming out of the as far as business is concerned. And we would, we have added about 1,000 odd people on the sales front. And our net campaign addition during the quarter was about 12,000 campaigns. So overall, net, it was a good quarter from an execution standpoint. We will continue to add sales force as we move subsequently into FY17. So from a business standpoint, this has been a good quarter for us. Definitely, as we are investing in sales force and some of the products, for example, we've launched Omni. The cost of all those have been upfronted, so there would be a near-term pressure on margins. But otherwise, it was a good quarter for us.
Right. So, we're talking about your paid campaigns growth. You said that on a net level, there has been some growth, but analysts say that this growth has been the slowest in FY16 that we have seen. What would you say about it?
Yeah, see, the steps that we have taken, that we should have taken a year back. What we have been impacted in FY16 is what are the scaling up of the sales infrastructure which we have not taken. So if you look at from a business standpoint, there are hunters and farmers. Farmer works on existing clients, and hunters bring in new clients into the system. Now, we have not added hunters meaningfully in the last. It has been almost flat for the past 2 years. Because of the stagnation of the sales force or the scaling up there, the number of new additions have sort of come down, which is what we saw the impact in FY16. However, this has been reversed, this has been arrested with the scaling up of the sales force, and that will continue to happen in the next several quarters. We are hopeful that whatever we have seen in Q4 will only continue to improve as we move forward into FY17.
Right, so you are expecting things to look better than any specific targets that you have for FY17 ahead?
Look, definitely we are hopeful that FY17 would be better than FY16. And as I mentioned, we are continuing to invest in sales and marketing infrastructure. The full impact of whatever steps that we have taken will be visible in FY18. But having said that, we are quite confident and hopeful that FY17 would be better than FY16 in all top-line metrics.
Right. So, can you also update us about Search Plus? On what stage is it right now, and how soon are we likely to see monetization taking place from that engine?
On the Search Plus, you have built a great product. Honestly, if you look at it, it's a unique single platform where you can do all transactions day to day on a very most convenient and efficient manner. So, from a consumer standpoint, JD is still a search destination. They are not aware about the search that they could transact on JD platform. That perception we want to change with our ad campaign, which is going to start from pretty soon, from June onwards. And you would see us communicating with the consumers about the benefits of having a single platform to do both search and transact. So the initial objective is to make sure engage with the consumers and make sure that they increase their volume of transaction and search on my platform, and then look at monetization. Monetization will be a byproduct of consumer engagement as far as we are concerned. So the near-term and medium-term focus is on consumer engagement, and hopefully, in FY18 we should start monetizing it.
And what about the A&P spend for Search Plus? How soon is that likely to start, and how much will you be investing in that?
Yeah, so we are looking at the same 100 crores, but it will be in several quarters. So it will start from June onwards. Hopefully, it will be in spurts and starts. We will look at it will be a very calibrated spend. We will spend and then look at the effectiveness before spending further. So that's how we have been. We have been very prudent as far as spending is concerned. But having said that, we will continue to invest and spend on this mass communication. So, but again, it will be with overall, effectiveness in mind.
In terms of sales force expansion further in FY17, how many more employees are you looking to add?
We plan to add another 2,000 odd on a feet on street and telemarketing and marketing executives, etc. Overall sales force, we plan to add another 2,000 odd people in FY17.
Right, and in terms of margins, can you give us an outlook out there?
The outlook, there will be a near-term pressure on the margin because we are making these investments. We have built a great product in Omni. We have built a great product in Search Plus. A lot of those costs are already sunk and upfronted. So, but having said, because we are expanding the scale, there will be a near-term impact on margin. But we are hopeful that once these business starts scaling up, once these sales force starts contributing to the top line, margin profile should improve from Q3, Q4 onwards. So overall, there will be a near-term pressure on margin, but as we move forward, the margin profile should improve.
Can you give us a number as to how much could be the impact on margin that you're talking about?
See, if you exclude the one-time ad spend that we are going to do, margin could contract by 150 odd basis points, or it may be stable. I mean, depending on how how effective my sales force productivity is. But yeah, there will be a near-term pressure on margin. But as we move forward, the margin profile should improve.
All right, Mr. Krishnamachari, thank you very much for joining us here on NDTV Profit and sharing with us the details about the fourth quarter and, of course, the outlook going forward. So in the near term, they're expecting some sort of a pressure because of their investment that they will be making as far as Search Plus is concerned, which is expected to give them the benefit or show on the books, of course, only by FY18. Is that what he said? We'll slip into another very quick break. Don't go anywhere. Prashant will be back.